Hey, what's going on, everybody? Welcome to Bonafide Investing. We talk all things high yield investing, futures, options, investment strategies, and goals in general. If you're new to the channel, welcome. A little bit of background about what we're doing here. I took a chunk of my net worth and I put it into a high yield all weather portfolio that I've called Cash for Life here, that seeks to, number one, pay my bills, and number two, maintain and pay down my margin over time. Please hit like and subscribe, help support the channel if you like what we're doing here. And please know that everything we discuss is not investment advice, not now, not ever. So please do your own research and due diligence before making any investments of your own. So what I wanted to do today, I wanted to talk about gold. And I wanted to talk about the gold holdings pertaining to Cash for Life here. And I think there is one clear winner from how gold has behaved over the past few weeks, along with the other precious metals. Gold hit an all-time high at the end of January of about $5,600 and has now come back down to what I think is a more healthy, reasonable level, right around, the high 4,000s, right around 5,000. Now, I'm a firm believer. I think those of you who have watched my channel, gold is my favorite asset. It is God's money. It is the ultimate form of money. And yes, I think silver plays a role as well. But at the end of the day, gold is strictly money. Anything the Bible talks about is important. But when the Bible talks about something repeatedly, like gold and silver, you really want to pay attention. Okay. And historically, governments can cheat. This is, we're living through now. What happens when the Fed cheats, the government cheats, and they don't, rein in their own control, right? They spend and spend, they print and print. And the bad news, because there's really no good news, the bad news is to keep this charade going, they can never stop printing. So just consider that, right? When it comes to whether you want to, own gold or not for your portfolio. So is high yield ETF gold the only way you should own gold? In my opinion, no. As a matter of fact, an emphatic hell no. I think that you should own gold in many forms. I only own gold this way in Cash Flow Life, right? I hold it other ways in other accounts, of course. But when it comes to high yield, yeah, I want to get gold exposure and I want it to pay me distributions, right? So I've got 4 ways that I currently hold gold across Cash for Life. My target allocation for gold is about 20%. It's probably on the higher end of what most investors hold when it comes to gold exposure. But again, I've been buying gold for over 20 years and I've never seen a reason not to hold it. I don't buy it to get rich. I don't buy it to speculate. I buy it to preserve wealth, and I buy it to preserve purchasing power as the dollar dies a slow, painful death over the next 10 to 20 years. Yes, I'm a cash is trash guy, but I think the dollar will remain the world reserve currency throughout my lifetime. I go so far as to say possibly even my children's lifetimes, but we shall see. But again, there's no doubt, just based on the math and pure logic, that purchasing power will keep going down over time. Not to go off on a tangent, but I was also reading something pretty fascinating, I think last week, maybe over the weekend, how, Dow 100,000, NASDAQ 50,000, S&P, 20,000. Yeah, I think those are all reasonable numbers, but you got to remember, what do those numbers really mean when, a Big Mac at McDonald's is, $30, $35, a Coca-Cola is $20, right? You go to Starbucks for a family of 4 and it's $100, right? So again, everything's relative, okay? And a lot of, I think, these numbers that we see in markets has to do a lot with inflation, right? And if you believe the CPI, I mean, it's amazing what can come of things from decades of just fudging numbers, right? And absolutely just straight up false data from governments and the Fed for over, I think many decades. It's never different this time. If you believe the latest CPI, if you believe the latest jobs report, good for you. I don't have that kind of faith. Again, I think inflation is much higher, and I think the economy is much worse than what we're led to believe. And I think there's going to come a point when markets realize this. And I think the best hedge against this, I guess, chaos coming is gold. And I think gold is going to be the ultimate hedge. So anyways, didn't mean to go off on a rant there, but I just want to kind of give you why I think gold's important and why I think investors should get exposure. Again, not investment advice. Those are the reasons I hold gold, just strictly because of math. It's God's money. And I think what's coming down the road, whether it be next week or 10 years from now, I think gold's going to help a lot of investors survive. So anyways, of the four, GDXY, GLDY, IAUI, and IGLD, just looking at, where gold's been, the yields, everything else, they all sold off, obviously, with the gold sell-off, that big crash we had late January, early February. I'm not going to include GDXY in this analysis because it tracks the gold miners. Okay, so this is a high yield income play. The yield max just sells covered calls on GDX, and you get the income that way. So I'm going to leave that one out because that's gold miners. That's not directed to the metal itself. GDXY will typically move with the stock market more often than gold, or just as much. So if we have a down market, GDXY will typically go down even if gold's up that day. So, and vice versa. Let's see, markets today are slightly up, I think. Let's see, where are we at? Right here. Yeah. So we got the S&P up about 0.5%, NASDAQ up about 1/3%. I find that interesting too, considering the bond market is signaling some deflation here in the short term with rates falling. So I'm actually surprised equities are up, but again, it's amazing what you can do after decades of money printing and cheating the data. So at the end of the day, not much surprises me when it comes to these markets. So IAU, I looked at, how much each of these three fell, how much they've rallied, how much they've distributed. And IAUI, which is Neos's ETF that sells covered calls on gold, is the winner, okay, in my opinion. Not just from performance and how it's done, but just having, I think, what I think is a healthy distribution between 10 and 15%. And it had a little bit better cushion on that huge sell-off late January, early February than GLDY and IGLD did. Now, IGLD is a very close second, okay? And I think it goes back to the fact that IGLD's surprised me in early February, paying another huge distribution. I thought December was a fluke, and I thought it paid just one high year-end distribution, but they've now paid 3 high distributions in a row. Is that the new normal for it? Probably not. Just the fact that I think volatility in gold and silver will at some point simmer. So I think that's going to really bring down a lot of these distributions. So when volatility drops, premiums usually drop. So I think as gold kind of settles in, to maybe the mid to high 4,000s, maybe 5,000 even, I think that volatility will drop, premiums will drop. We'll see. So IGLD was a close second. That's another just really good gold ETF as well. Now, in defense of GLDY, okay, let's talk about this one. GLDY, I think, fell more strictly for the fact that its distribution is consistently high. And as a matter of fact, through this volatility, what I found interesting is GLDY has actually brought their distribution down quite a bit. And they're still yielding about 30% annualized, but they're up in that 50 to 60% range for a good chunk of the past few months, okay? So if you're starting out in a high yield account and you want gold high yield, if I'm starting out, I'm buying GLDY only. Even though, IAUI is the winner, I would still be buying GLDY strictly for that consistently high weekly distribution. Remember, IAUI and IGLD pay monthly. GLDY pays weekly. They pay every Friday, okay? So I would be buying GLDY if I was starting out in a small high yield strategy and just plowing those dividends back into something like an IAUI, or I don't know, we talked about it on a video just recently, something into like a QQQI, SPY-I, TLTW, maybe into, the indices, bonds. So again, those are some of my thoughts just around gold. And, yeah, if I were to offer advice, and again, this is never advice, but yeah, I would tell any investor out there, when I was a financial advisor previously, the reason I'm not an advisor anymore is because they don't tout gold, right? Because there's no money to be made. That's why I tell you guys prior, fire your broker, get out of these firms, right? They're a lot of them are stuck in the 1940s, Edward Jones, Merrill Lynch's, what have you, and they're just making fees upon fees on you to do something I think you could do yourself, right? So again, those are my thoughts on gold. It is God's money, and at the end of the day, remember to trust God. Always rely on math. Always rely on charts. Always ignore politicians and bankers, as again, they don't have your best interests in mind. They have their own. But love to hear your thoughts and comments. Again, please hit like and subscribe. Hope you got something from today's video. Have a good